Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update here on the portfolio. And we're going to go through our trackyourdividends.com and update that. And then we'll go and go through the updated spreadsheet to see how we're performing for this week. And so we'll just get right into it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we'll start off with the day here. Portfolio at the end of this week closing out at $4,336.33, up $28.10 on the day, up 0.65%. For the week here, we are down $2.80, down 0.06% on the week. For the month, we are up $35.35, up 0.82%. For the 3 months, we are up $349.73, up 8.77%. And for the year, we are up $641.33, up 17.36% for the year. And that will be the same for the all-time performance. So we'll go through each position quickly here. BCE, which is Bell Canada, is closed out at $58.13. We own 8 shares of this, and it holds about 10.86% of the portfolio. I'm sure some of you own some of these positions, so going through this is kind of tedious, but we'll just do it anyways because that's what we do. BMO, Bank of Montreal, closing out at $116.01. We own 6 shares of this. This is the position we actually updated today. So we did increase the position on this one. It used to be 5, now it is 6, and it holds about 16.25% of the portfolio. Our average cost of getting in is $86.88. If we go down to the bottom here, I'll just show you the buy here. So we purchased it this morning at 1 share at $114.65, which was a great price because it hit 1601 today. 1601, 116 and 1 cent today. My numbers are off. My brain must be mush. But again, that is Bank of Montreal, ticker symbol BMO. So we'll update that on the dividend tracker, and we'll go from there. Next position we have here is Bank of Nova Scotia, ticker symbol BNS, closing out at $78. We own 7 shares of this, and it holds about 12.75% of the portfolio. Next position we have here is Loblaws, ticker symbol L, closing out at $69.30, down 97 cents on the day. We own 6 shares of this. It holds about 9.71% of the portfolio. And that again is Loblaws, ticker symbol L. Next position we have here is Manulife Financial Corporation, closing out the day at $26.60. The ticker for Manulife Financial Corporation is MFC. We own 17 shares of this, and it holds about 10.56% of the portfolio. Again, that is Manulife Financial Corporation, ticker symbol MFC. Next position we have here is Royal Bank of Canada, closing out at $116.56. Ticker symbol is RY. We own 7 shares of this, and it holds about 19.05% of the portfolio. This is probably a position we won't be updating for a while, just because it holds quite a big chunk of the portfolio. So again, that is Royal Bank of Canada, ticker symbol RY. Next position we have here is TELUS Corporation, ticker symbol T, closing out the day at $25.79. We own 15 shares of this. It holds about 9.03% of the portfolio. And again, that is TELUS Corporation, ticker symbol T. Next position we have here is Toronto Dominion Bank, closing out at $84.21. Ticker symbol TD. We own 6 shares of this, and it holds about 11.8% of the portfolio. Again, that is Toronto Dominion Bank, ticker symbol TD. And so that is the last position there. Available for trade. So in the cash account, we have $53.20. And again, every week we do put in $100 to start trading. And here's my watch list. I will go through this in one of these videos. There's just a lot of stuff I got lined up that I want to record and show you guys and just put out there just so that everyone understands. And so that is the portfolio at the end of the week. And so we will head over to trackyourdividends.com, which is right over here. And we'll pull up the share we bought today. So we can punch that in. And so here is trackyourdividends.com. So last week, the portfolio closed at a value of $4,167 with a profit of $585. The dividend yield, if you were to build this portfolio, is 4.06% if you were to build this portfolio at the end of today, which I'll just scroll through and stop if you want to take notes. And then our dividend yield, our yield on cost is 4.73%. And that is basically due to dollar cost averaging, buying the share at a lower price, but reaping the rewards of higher dividend yield. And so that is why it is higher than the dividend yield as of today. The annual income that this portfolio is producing is $169 a year. And again, it is in a tax-free savings account. So just to go through it here, and yeah, so we will go ahead and add the new holdings. So ticker symbol was BMO. Is it in here anymore? Oh, not BMO. BMO.TO. Looks like we haven't done this one in a while. So we'll add one share, cost basis of $114.65, and add that. Boom. So that is updated. So as you can see here, BMO used to be at 5 shares. Now it is at 6 shares. Our average price of getting in is $86.88. Currently, we're up $175 on this position here. And the dividend yield as of today, if you were to purchase anything today, would be sitting at 3.65. But our yield is 4.88% because we were able to buy at a price around $86.88. The annual income coming in from this is $25.44. So here we are. Portfolio value is now $4,283. Do take into factor this does not include the cash account in the portfolio. And then here is $586 in profit. Dividend yield today, if you build the portfolio with the updated position, is 4.05%. And now our yield on cost is 4.7%. Annual income has increased to $174, which is fantastic. So I just want to go through here because I just want to note how powerful dividends are and can be, and dollar cost averaging and consistently investing in your portfolio or your dividend portfolio. As you can see here in the left column, I'll find a way to highlight this, but in the left column, you can see that for the most part in each position here, the dividend yield is much lower than what we are receiving for a dividend yield because of consistently investing and dollar cost averaging, of course, and reaping the benefits of that. You can see BCE, which is Bell Canada, our yield is 6.2 compared to the 6.02%. Of course, this will change with the price of the stock itself. So just keep that in mind. BMO, we're sitting at a 4.88%, whereas today, if you were to purchase it today, you'd get a yield of 3.65%. Bank of Nova Scotia, big difference here, 4.62 today. Our yield is 6.6, which is fantastic. Loblaws typically pays a lower dividend. Excuse me. So if you buy it today, it'd be 1.93, but we're over that 2%, which is fantastic. Manulife Financial Corporation, same thing here, 4.21 at a 5.82 versus a 5.82% yield for this portfolio. Royal Bank of Canada, a little bit of difference there because our yield on cost is pretty similar to what the price is today, off by about $5. But we are still receiving a bit of a higher yield on that one. Tell us, you would actually be receiving a better dividend today, just because the price today is $25.79 and our yield is about, our cost on this position here is about $26.25. So you'd be doing a bit better there. And TD, same thing, 3.75%. If you were to buy it today, we're sitting at a 4.09% yield. But it just goes to show the power of consistently investing, dollar cost averaging. You can always have a bit of a higher yield on these positions as long as you hold for the long term. I'm talking 5, 10, 20 years, maybe even forever. And so just do keep that in mind, but that is the updated tracker. So we will head back to here. And of course, I will pop up on the screen here the spreadsheet for the week and where we're at so far, thus far Obviously, no dividends this week that came in. I do believe we will be receiving some next week. And then we can do a month-end review on the dividends that we received for the month of April. So I'll just pop it up here and boom. So as you can see here, nothing's really changed. Dividends still haven't updated or anything, but 2021, as you look at the total amount, we've received $37.89 in dividends. Last year, 2020, we received $17.37. Of course, it's not fair, as we only started receiving dividends in October of 2020 when we started this channel and this journey, and just kind of this record of the power of dividend investing. And so I know dividends can be boring, not exciting, but it does, there's a lot of value to it. And so just keep that in mind. I'm not all about the hype stocks and following what the flavor of the month is. Typically I'm looking for straight value and dividends, because that is just a bonus for the most part. And so as you can see here, year over year growth using $17.37 as the baseline at the total of 2020 for dividends, we are 118% increase in dividends. Of course, that number is quite large. But over time, you will see that number tend to get, roughly around the same. We'll see how it ends up in the year, and then compare it to next year, which is 2022. And you'll start seeing that number decrease. But again, like a business, seeing that kind of growth, when you treat your portfolio like a business, it gives you business results, for the most part, if you manage it well. And so net deposits has increased for this year at $1,825. We are almost over the amount that we contributed last year. Total invested now since starting this portfolio is $3,695, and the market value today is $4,336.33, which you can see on the screen anyways. And then our performance for the year has gone down to 4.52%, but I do believe we are still above, we are above water here. But we still want to try to increase that as the dividends roll in. It does help with that performance for the year. And so, yeah, that's pretty much it for the video, guys. Hopefully you guys did enjoy the video. Again, just the end of the week update. But just remember, I always have to state this. I'm not a financial advisor. I'm definitely not your financial advisor. If you do want to seek professional help, go seek a professional. And just continue to learn, continue to do your research, do value assessments, price to earnings, price to book, price to sales ratios, figure those out, learn those, and maybe we'll talk about those in a future video. But always do your research on that. Don't go too hype with what the flavor of the month is, because that has burned a lot of new investors that came in last year or the beginning of this year, and are just starting out and chasing those hype stocks. I'm not gonna point one out or anything, or a few out, but they are out there. And just so you guys know, stay the course if you are dividend investing, and just do your due diligence. And other than that, guys, hope you guys have a great weekend, and we will see you in the next one. Bye.